Hey everybody, welcome back to Whiteboard Finance. Today I have an urgent update for you. We are officially in World War III of trade wars, and guess who it's with, baby?
Made in China.
Made in China. The markets are crashing, tariffs are flying, and the U.S.-China economic relationship just hit DEFCON 1. Let's break this down right now. So over the last 24 hours, China...
Made in China.
Okay, I won't do that anymore. I'm sorry. I got excited. I got a new little sound on my button here. China announced a massive 34% tariff on all U.S. goods. Not some, not a few, but all. So this wasn't just a slap on the wrist. This was a full-on counterpunch to President Trump's latest tariff wave. So on top of that, China labeled 11 American companies as unreliable entities and put 16 more on their export control list, okay? So take a look at this. China's Ministry of Commerce said it was adding 11 American companies to its list of unreliable entities, essentially barring them from doing business in China or with Chinese companies. So here's where it gets strategic. China is also imposing export controls on rare earth minerals and also metals. So samarium, gadolinium, terbium, dysprosium, lutetium, scandium, and Ethereum. I don't even know how to pronounce this last one. So these are critical to tech, defense, and energy industries. And it's not just trade. This is chess, guys. And China just made a power move. So let's talk about the damage because the numbers are ugly. What is this trade war costing us? In just the last 2 days, the S&P 500 has lost $3.5 trillion in market cap.
You are fake news.
That is not fake news. Oil prices are down 15% in 48 hours, the biggest drop since the pandemic crash in April of 2020. Take a look at this oil chart. This is ugly. So here we have the Liberation Day announcement, which I've been posting my butt off on this channel. Please like, please comment, please subscribe. Please hit the bell notification so you get notified of when I drop because this is time sensitive. So we have the Liberation Day announcement. S&P 500 erases $2 trillion, and then now oil prices are down 15% in 2 days as China...
Made in China.
...retaliates. Okay, I won't hit that anymore. I'm sorry. I know it's getting kind of annoying. I get excited. I load up these new sounds in my little pad, and I have to use them, you guys, okay? So anyway, this is textbook recession behavior. So in 2024, the U.S. imported $439 billion from China, while China imported $143 billion from us. That's $582 billion in total trade. So now we've got $198 billion worth of trade, of that under 34% tariffs. So that is a tax on businesses, tax on consumers, and ultimately tax on you, okay? Maybe I can turn myself into Uncle Sam with the pointing finger. So take a look at this chart. All figures are in millions of US dollars on a nominal basis, not seasonally adjusted unless otherwise specified. So if we look at the total for 2024, we can see the exports down here at 143,000. Remember, these are in millions, so it's really billions. Imports, 438,000. And then the balance difference is almost 300 billion. Okay, we can see that right here. Okay, so just how big is this? Let's get some perspective here. This is now officially the largest tax increase in U.S. history, even before accounting for retaliation. So it's about 1.6% of U.S. GDP, which is 50 basis points more than the previous record set back in 1968. So again, basis points are just 1/100th of a percent. 50 basis points is 0.5%. Take a look at this chart right here. So if we look at 2025, which is the red bar, the next closest was 1968, which is the bar right next to it. And you can see that was closer to about 1.1, 1.2. So let's take a look at this chart right here showing the U.S. average tariff rates as a percentage. Okay, so this is coming from U.S. Customs, U.S. Census Bureau. All my stuff is sourced, you guys. Bloomberg Economics. None of this is just, you know, me licking my finger and just presenting this stuff. It's all sourced. So if you take a look at this, the 2024 level is 2.3%. Implemented. I know this is kind of hard to read. Let me see if I can zoom in. Again, as always, if you're watching this on a TV, you're fine. But if you're on mobile, turn it to landscape mode. I know I have to explain this in 2025. Bruh. So anyway, you can see non-USMCA compliant goods. And then all these different colors here. I'm not going to sit here and decode every single layer. Just pause the video if you want to take a look at this in more depth. So let's keep moving forward. So what's happening to the bond market? If you guys remember this video right here that I made a couple weeks ago, this could be part of Trump's master plan, okay?
Wrong.
Wait, did I hit the wrong one? Sorry, I meant to hit that one. So the bond market is already pricing in a recession. Is this the whole point of Trump wanting to do all this? So the 10-year Treasury yield is down 90 basis points in 2 months. It's sitting below 3.9% at the time of this recording. Actually, it did go up just a little bit. Sorry, 3.98%. So the market is screaming slowdown. And the S&P 500, it's on track for an 8% loss in just 2 days. Take a look at this 5-day chart right here, you guys. This is absolutely insane. If you look at year to date, it's been getting pummeled. This is 6 months. This is 1 month. This is 5 days. Look at this, down 4.37% in 1 day at the time of this recording. So this would be the worst 2-day drop since March of 2020. So if I zoom out all time, you can see March of 2020 right here. I know it's kind of small, you guys. I apologize. Here's January 1st. Here's March of 2020. Huge drop. Same thing from November to basically August of 2022. And then now we have what's going on right now over the past few days. We've now erased over $7 trillion in market cap since February 19th, and let that sink in. Again, an exercise that I always like to do. If you've been watching my videos, you're probably sick of this, but Google the amount of time that goes by in seconds when you Google 1,000,000 seconds, 1,000,000,000 seconds, and 1,000,000,000,000 seconds. The difference is staggering. Let that sink in. And it's not just China, you guys. It's not just China. Take a look at this. Mexico is saying more tariffs are coming. The EU is preparing countermeasures, and Canada is ready to respond. I will be honest, at the time of this recording, I believe Mexico's president said she's not going to be doing tit-for-tat tariffs. And I think Canada, they're kind of holding off right now. But again, things are changing so fast. I just want to make sure that you guys are aware of this. So Treasury Secretary Bessent and Commerce Secretary Lutnick are holding the line. And their message is this: if you retaliate, we escalate. This isn't just policy anymore. It's a game of chicken. Check out this clip right here.
There's some policy decisions here. China is at 34%, added to the 20% already, so that's 54% on Chinese goods.
Yes.
Are they going to come back with something big?
Well, we'll see what they do. Is my advice to every country right now is do not retaliate. Sit back, take it in. Let's see how it goes, because if you retaliate, there will be escalation. If you don't retaliate, this is the high water mark.
So to take a line from Michael Saylor, volatility is vitality. Okay, so is volatility part of this strategy? So here's the VIX. The VIX is basically the market's fear index. It's the volatility index. It's sitting above 40 at the time of this recording. So that is panic territory, you guys. We haven't seen this since the yen carry trade collapsed in 2024, if you guys remember that. And also the U.S. credit risk index is now the highest it's been since the regional bank crisis. Take a look at this chart right here. So this is not a dip, you guys. This is a full-blown repricing. But guess what I'm doing? I'm buying the dip. Yesterday, I bought, I don't know if I should disclose exact amounts. Let's just say it's multiple 5 figures. I bought the dip. It was mostly VTI, okay, U.S. total stock market. I'm still bullish on America, and I'll show you why exactly right here. M2 money supply is going up. World reserve currency is still intact. Military bases globally, the petrodollar, oil still traded in dollars for the most part, U.S. dollar dominance, and the deepest, strongest capital markets in the world. Buy the dip. Nothing stops this train. Do you think I'm worried about this? Absolutely not. I'm smash buying. So take a look at this tweet right here from Donald Trump. This was on April 4th, 11:08 a.m., similar to the time of this recording. This would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He is always, quote unquote, late, but he would now change his image and quickly. Energy prices are down, interest rates are down, inflation is down, even eggs are down 69%, and jobs are up, all within 2 months. A big win for America. Cut interest rates, Jerome, and stop playing politics. Wait, sorry. All right, I meant to do the applause one. So whether you guys agree with this or not, the whole point, again, from that last video that I did, I think this is all to try and lower rates. That's why I'm showing you the 10-year Treasury spread. That's why I'm showing you all that stuff, you guys. So at the end of the day, what do we do with all this information? So like I said, I'm dollar cost averaging and I smash buy, okay? I smash bought multiple 5 figures of thousands of dollars over the past 2 days. Maybe I'll regret it, probably won't. Stay nimble, stay informed, and understand this is similar to, I don't want to use like World War III or get inflammatory, but this is pretty serious when it comes to trade wars, and it will not be resolved overnight. So we may be in Max Payne territory for a while here. Ultimately, I think a lot of these tariffs are going to be capitulation. So when other countries either lower their trade deficits with us or they lower the tariffs that they currently have in place with us, we're going to just drop everything we just did over the past 2 days anyway. So we'll see how that plays out. If you want real-time analysis, make sure you're subscribed, turn on notifications, and if you're serious about building wealth regardless of market sentiment, check out Whiteboard Finance University down in the description below. Thank you for watching, and as always, have a prosperous day.
Wrong. Made in China.
All right, guys, peace.
What do you think about the tariffs?
I think they're good. What? Lily, what? You think the tariffs are... What do you think about the tariffs? I think they're bad. Oh, Lily, you're a lefty.